What's up, guys? Stas here. So a pretty strong day in the stock market today with the S&P 500 up 25 points, the Dow Jones up 157 points, and the Nasdaq up 113 points, followed by the Russell 2000 beating them all up $32, up almost 2.5% on the day. And in this video, we're going to be talking more about the markets, breaking down some technicals, and I also want to go over what exactly is next for the stock market. Not that I'm some wizard, not that I have some crystal ball here, but I want to go over a couple of scenarios in the next couple of weeks for the stock market, as well as a bunch of stocks that I'm looking to buy right now, as well as what I've been doing as of late with my actual money in the stock market. So if you guys find value in this video, as always, hit that like button for me. Let's try to get 300 likes on this video, and check out all the free links down below in the description box if you want 2 free stocks from Webull, and if you want to be further connected with the Strive Smart community. So let's get into the video, starting off here with the S&P 500. And first and foremost, guys, when I'm doing technical analysis on indexes, stocks, ETFs, whatever it may be, I'm looking at many time frames, right? Well, it depends. Honestly, if I'm day trading, I'm mostly looking at intraday charts, smaller time frame charts. If I'm swing trading, I'm mostly looking at larger time frame charts. But when I'm doing analysis on the overall markets to get a perspective of kind of what's going on, I'm looking at everything, right? I'm looking at the yearly chart, the 6-month chart, which you see here. I'm looking at the 20-day chart, the 5-day chart, the intraday chart, right? So that's exactly what we're going to do right now on the S&P 500 to kind of gauge where the market is and what could end up happening here. So first and foremost, on this 6-month chart, it's very clear that the uptrend is continuing, right? And how do I know that? Well, take a look at this channel that I've drawn out here on my ThinkOrSwim platform, as you guys can see on these 2 trend lines, right? And quick pro tip, how do you draw a channel in ThinkOrSwim? Go up here to drawings, go to drawing tools, and go to the channel button right here. This gives you a perfectly parallel channel, and it really helps you identify uptrends in indexes, stocks, and ETFs. And that's exactly what you guys see here. So with today's price action, you guys can see again up $25, up about 0.85%. We held 30.30, 30.20, which is good, right? We held that level as a support, and we actually closed right under a pretty major resistance at about 30.70. You guys have heard me talk about that many times over these past couple of videos, and that's not too good here for the bulls, quite honestly, right? And you guys see in the thumbnail of this video, is this a bull trap? We're going to talk about that here in a couple of minutes as well. So now let's get into some nitty-gritty here on the charts. Let's go into the smaller time frames, starting off with the 20-day chart. So last week, the S&P completely fell through the floor on Wednesday, I believe. You guys can see here, we topped at 32.30. About a couple days, right, we saw a pretty strong resistance at 32.20. We dropped below 31.20. That was a big break for the bulls. That's not too good for the bulls, right? We broke 30.70. Another break that was not good for the bulls. But we can see overall, we found some support at around 29.60 to about 29.70 to about 29.80, and now we're slowly starting to rebound. But this brings us back to that level at 30.60 to 30.75 and back to that bull trap, right? I personally think here, guys, if we fail at 30.70, this very well could be a bull trap. And what's a bull trap anyway, for those of you guys that don't know? It's when the markets go up and they kind of trick people to get into the markets. Let me rephrase that. It's not when the markets go up. A bull trap is when the markets fall down drastically, they see a little rebound, which suckers in, not saying that that's this, but it suckers in people into the markets, and ultimately it's followed by another big drop, right? Which is why it's called a trap, because the bulls, they see a little bit of a rally, they get into it, right? They start buying stocks, and then all of a sudden the markets fall again, and then these bulls get trapped, they end up losing money. So is this a bull trap? It very well could be, right? And again, going back to 3070, I think if we fail tomorrow at 3070, if we start to push down 3050, going back down to retest 3020, that's not going to be too good for the bulls. And in fact, that could constitute this as a bull trap because we could be on our way to a lower low there. And again, that could catch a lot of bulls holding shares that they'll be down on at that point. So if we don't break 3070, guys, and ultimately if we don't break, in my opinion, 3120, we could end up going lower because even if we go up to 3120, we're still going to have to break that, which is also a major resistance. So the bull trap theory could end up playing out, even tomorrow, even if we end up rallying up, because again, 3120 is a resistance. So this could draw even more bulls in to the point where, okay, if we fail at 3120, we could end up dumping and falling off a cliff there and maybe even forming, some sort of head and shoulders pattern, which could be forming here on the hourly chart that I'm looking at for the S&P 500. And another major event that we have to keep an eye out on is Jerome Powell testifying before Congress on 16th of June, which is tomorrow, and the 17th, right? And this will bring, and let me read some notes here, Federal Reserve Chairman Powell will testify before the Congress in hearings on the central bank's semi-annual monetary policy report. The Fed delivers the report providing an overview of the economy twice a year, usually in February and again in June or July. And the chair appears in successive days of hearings before the Senate Banking and House Financial Services Committee. So this is going to be big. We saw last week Powell spoke, kind of spooked the markets on his gloomy outlook on the economy, and that's when we saw the S&P drop about 100 points. Dow was down like almost 2,000. So that very well could happen again if there's more gloom around the economy, more gloom around, how quick the recovery is actually going to be over the next couple of quarters. So watch out for Powell tomorrow and on the 17th, and watch out for 3070 here on the S&P and 3120. These are very, very critical levels. And if we go back to the 5-day, 5-minute chart or to it for the first time, one good thing for the bulls here is they are breaking out, not saying that I'm a bull or a bear. I'm somebody that's in the middle that just trades the charts. And one good thing here is the bulls are breaking out of the major moving averages on the 5-day, 5-minute, right? You guys can see the 180 and the 50 SMA have both been resistances. So this is a good sign for the bulls, but again, we're still trading under 3070, which failed yesterday. So I still need to see that break up and above 3120 before I end up buying more into this market, quite honestly, guys. And when it comes to the Dow Jones, again, up about 160 points. You guys can see on the 5-day, 5-minute, just like the S&P, we are breaking moving averages, but we have not quite yet broken above the resistance from yesterday. So I want to see that break for the bulls, right? For more bullish momentum. And going to this 4-hour chart on the Dow Jones, you guys can see that we're still hovering right around 25.8, 25.9, which happens to be a pretty strong resistance as well on the Dow. So this is not completely bullish quite yet, right? Although the uptrend's continuing overall, as you guys can see here, right? This could very well get rejected at 26,000, 25.8, whatever, and ultimately dump, which could end up being, like I said on the S&P, a head and shoulders pattern. So this could be a bull trap unless we break out and fill the gap up to, let's say, 27,000. And when it comes down to the Nasdaq here, guys, you can see we topped at 10,100, hit that all-time high, and now we're actually right under a resistance as well, right around 9,800, and right around that level that we failed to break out from yesterday, or actually the level that we failed at yesterday, which we failed to break out of today, which is right at about 98.30 to about 98.50. And another interesting thing about the markets, guys, I don't know if you caught this, but The futures last night got very bad. The futures, you guys can see here on the E-mini S&P futures, at about 2 a.m. Eastern Standard Time, they were at 29.20. That's unbelievable, guys. So do you understand? The futures swung from 29.20 up to 30.70 in the matter of a couple of hours here, under 24 hours, and that's a move of about 4.5% to 5%. So now we're seeing these types of swings where volatility is really starting to come back in. The VIX, which is the volatility index, is starting to come alive again. So this leads me to be a bit more conservative again, a bit more patient, and a bit more cash heavy, because I don't want to be in the position where the markets drop, I add a lot of cash, then they drop again, and I don't have more cash to deploy, right? That's kind of what I've been talking about over these past couple of videos. So let me know down below, guys, in the comments, what are your thoughts, as always, in this market, excuse me, with the market. Where do you guys see it going over the next couple of weeks? I would love to know. Me personally, again, I'm looking at those key levels that we've talked about. I'm being more patient, being pretty cash heavy right now, and I'm just letting, I'm really looking forward to Jerome Powell speaking, and I'm just letting the markets play themselves out, and I'm not being too jumpy at different opportunities. I'm just waiting, chilling, sitting back. That's kind of my approach right now in the markets in general. So kind of what I did today goes in line with what we talked about in yesterday's video. I actually traded NIO, ticker symbol NIO. And back to what we said yesterday, guys, when the markets are down, there's some stocks that are uncorrelated to the markets, right? So going back to the S&P, some of you guys also might have not realized, the S&P was down quite a bit this morning. We opened up, it was very red, and it saw a pretty massive comeback, about 100 points of a comeback here. And during this time period where it was red, NIO stock was actually green, believe it or not, guys. NIO was green. And I noticed that, right? We were holding $6, which if you guys watched my video yesterday, I was saying watch NIO at $6. It could launch off from there. And we also talked about $6.20. $6 and $6.20 are two key levels on NIO. And the second we broke $6.20, that resistance, that was my time to get in. So I personally got in. Let me see these notes very quickly. I believe right around 6:30, up 6:35 is where I ended up getting in, and you guys can see here on the intraday chart, we completely blew out of 620. So I got in at 635, and ultimately I rode this thing up to $6.92, guys, making this one of my better trades in the recent couple of weeks. You guys remember last week, or was it the week before? I don't really remember. It was really recent. I traded NIO for around a 12% profit. So now I grabbed another 8%. So that's very good. And this stock's been completely on fire, and it's one that I'm actually looking to maybe re-enter tomorrow, right? So NIO grabbed 12% last week or the week before, grabbed another 8% profit here today. So I'm very happy with how this stock has ended up performing. So let's get into now, and by the way, let me know down below in the comments what you guys did. For me, that's all I ended up doing today, but let me know down below in the comments what you guys did, as well as a bunch of stocks that you're watching heading into these next couple of weeks. So what I'm watching is Shopify. Let's get into the deal that went down between Walmart and Shopify. Was it today? Was it yesterday? But we got news today that they're partnering to expand Walmart's e-commerce business. And Walmart is the third, get this guys, it's the third biggest marketplace behind, of course, Amazon and eBay. And the world's biggest brick and mortar business, it's also that. It's trying to ramp up its efforts to capture a bigger slice of the CV-driven surge in online shopping. And we all know, ever since this crisis, online shopping has been exploding. So this is a good move, in my opinion, for Walmart if we're looking long-term, right? And last month, to give you guys some data, Walmart reported a 74% surge in quarterly e-commerce sales. And with that, this is actually looking to get better, with this partnership. They're actually looking to add a lot more third-party sellers and do a model kind of like Amazon, which could ultimately bring a lot more sales to the business. And if you guys know, fees are taking off of those third-party sellers, so it's kind of like it's like exponential growth in a way. The more people that are selling, the more fees are accumulated, the more money made. So this is good. The world's largest retailer, it's aiming to add 1,200 Shopify sellers this year, which is good. And again, that's going to key into their growth with e-commerce. So Walmart didn't really react too much on this news, but Shopify, on the flip side, did. It was up 9% today. We held 730. That's a very good sign as a support. We also bounced off the 180 SMA here on the 4-hour chart. And with today's action, it's pretty much confirmed that we're going up, right? And we also broke 780, which is another confirmation that we're going higher here. So in the short term, we're looking at Shopify, and it's a bit overbought, so I kind of want to wait and see if it cools off maybe to 780, 790 to find some sort of support there. If it does, I'm looking to catch the move up to 850, and that's just in the short term, right, guys? If I'm looking at Shopify from a long-term investment perspective, at this point, I'm not touching it, right? We're seeing a lot of these growth stocks. They have very lofty valuations. Shopify is one of those, right? So for me, long-term wise, I'm not looking to get in right now, but if we're looking to grab a short-term bullish momentum play, this one is definitely worth watching. And again, Walmart didn't really react to the news, but I'm still watching it either way, as it is down about $16 from the highs at about 130, 135. So that's about a 12% gap that was open. So I'm watching to see what happens here in the next couple of days when it does end up coming down to Walmart. And another one that did very well today was DKNG, guys. I'm not exactly sure the catalyst that ended up moving this. I probably should have looked into this, but I didn't really actually see anything in the live news tab earlier, but we can see here sports betting ETF makes adjustments after hot start, including addition of Wynn Resorts. I'm not sure if that has anything to do with it, but either way, DraftKings was up 13% today. And actually, wait a second. Actually, no. I was going to say, is it because something with baseball or something like that? Either way, as sports in general now are slowly starting to open up, DraftKings, which is a sports betting app, right? It could end up seeing a surge in the stock's price. It could end up it's going to see a surge in users, activity. So this is a pretty good sign for DKNG. And again, I'm not sure exactly what ended up moving the stock up today, but 13% up $5 almost today is a very good sign, right? And if we break down a bit on this hourly chart, notice how it broke the downtrend today, guys. Very good sign here. We broke this wedge to the upside, right? We held 35. We broke the resistance of the wedge at about $38, and we also broke $40, which is also a resistance. So this is very bullish in my eyes for DKNG. The price target at this point that I'm looking at is probably going to be around $45. That is the resistance back in the beginning, or from back in the beginning of this month. So watch that move there for DKNG. Another one here is Square. Square held $85 pretty nicely. Also is breaking out of this mini little downtrend here over the past couple of days. So I'm looking to see at this point if it makes a move back up into the mid-90s. And ultimately, my price target on Square is $100. As you guys can see here on the 3-year chart, that is where we were a couple of weeks, actually not even a couple of weeks ago. Geez, it was actually almost 2 years ago that Square was at $100. I don't know why I said a couple weeks, but it was almost 2 years ago. And another one here that did very well today was Tesla, ticker symbol TSLA, up 6%, up $55 today. And the automaker, I don't know if this is official quite yet, but it is a rumor that the automaker is in talks with officials in Travis County, Texas, regarding incentives terms for a potential assembly plant. Discussions are expected to take place on Tuesday, though nothing has been disclosed. Again, we don't know exactly what's going to happen there, and further discussions will be on Thursday. And we also got news that China car registrations were up 150% month over month when it comes to May, comparing it to April, and that is probably the biggest driver of Tesla stock today. But either way, I'm looking at it as a potential trade. On the 4-hour chart with today's action, we held the 50 SMA very good at a higher low. We broke 940, we broke 970, both of these pretty strong levels of resistances, so the bulls are taking charge here when it comes to Tesla stock. And the last couple here, I'm going to start off with SPCE Virgin Galactic, and this is one that I actually do still have my swing shares in, and of course I'm a long-term investor as well. And take a look at where we are right now on the chart. I've been talking about over the past couple of weeks how Virgin Galactic has been squeezing deeper and deeper into this wedge on this 4-hour chart. And let me make it a bit clearer for you guys so you can see it. Notice how we're holding $15 as a support. That's the bottom of the wedge, right? And you can also see as we're holding 15, we're also making lower highs based on the high from 42, with the subsequent high being at 21, followed by 18, followed by 17, and now we're at 1530, which it could be the next lower high, and if we drop below 15, that won't be good. But get this. If we break 1530, 1550, that's going to be the bullish signal that could end up shooting the stock back up to 18, 19 bucks. If we break 19 bucks, which is another main resistance, we might fill up to 21 bucks, and watch out above. I'm telling you guys, watch out above. If this breaks 21, we could end up filling all the way to 25 and above. This is that type of stock where it could double in a day. Not saying it's going to double in a day. That's a bit unrealistic. But it could go up 50% in a day, 60% on a day, especially on a positive test flight on any major news catalyst regarding the company. This stock could go berserk, guys. It's still a small cap company at the end of the day. Actually, let me double check that. I don't know exactly. I'm slipping my mind how big the company actually is. Let's see. Market cap, $3 billion, guys. So it's still a pretty small company, $3 billion market cap. So watch it, what it does in this wedge. And to end off the video, guys, let's talk about some gold plays. I'm still watching GLD. GLD is an ETF that tracks the price of gold. So if you think gold's going up, it's holding 1700 quite nicely, which is a pretty strong support, 1695, 1700. If you guys think gold's going to make a move back up into the high 1700s and maybe into the 1800s, you could look at GLD, which again tracks the price of gold, right? So if you see we're in a downwards wedge now, if we break 163, I'm thinking GLD could fill the gap up to 166. And another one that I'm watching, which I don't have shares in, but I am long via call options, is GDX, which is a gold miners ETF. This was up about 90 cents today, strong day, up almost 3%. And you guys can see it is also in this little downwards. Let me clear the strong set so you guys can see it. It's also in this little downwards pattern of lower lows and lower highs. So I'm just pretty much waiting at this point. If GDX breaks this line that I just drew, we see a pop above moving averages here on the 6-month chart. This could see a well-deserved rally, and by well-deserved, I mean it's been a while since this thing has really seen a nice upwards push. It's been about a month at this point, so GDX is due for a rally. I'm just waiting when, right? And if we get that breakout, that's going to be, in my opinion, when the rally could start. So overall, that is it for this video, guys. I went over a bunch of stuff in this video, probably dragged it a bit longer than expected, but either way, if you guys stuck till the end, let me know down below in the comments. Say stuck till the end down below in the comments, and while you're at it, hit that like button for me. Again, let's try to get this to 300 likes, and if you guys have not yet claimed your 2 free stocks from Webull, that is linked down below in the description box, valued up to $4 $1,400, and all you have to do is put in $100 to actually get those stocks. So I hope you guys did very well in the markets today. Again, thanks for watching. We actually hit 10,000 subscribers. It's unbelievable. Thanks so much for the support, guys. It's unbelievable. We finally hit 10K, but the thing is, this is only the beginning, guys. We're going to 100K next, and it's not possible without you guys. And again, thanks so much. Thanks so much for all the support. I'll catch you all in the next video. Stay safe as always, guys. Peace out.